Welcome back to another episode of Property Auction Hunters with your co-hosts Piotr, Safe, and today we've got a special guest, Scott Marshall, who is a founder of Roma Finance, and he's going to be telling us all about his story, about how he got started with Roma Finance, and all about the business and where it's going to be going. So, Scott, welcome.
Thank you very much. It's great to be here.
Good to have you as well. So, just tell us a bit about, I know we talk sort of off camera about the reasons of why someone starts a business, and sometimes you have to have a chip on your shoulder to want to have that tenacity and that drive and resilience to kind of keep going in business. But talk to us a bit about Roma Finance. How was it founded? Why was it founded? And what was the kind of vision behind it as well?
Yeah, so I've been working in the finance industry for 10 years or so. And I'd worked for a firm of accountants called Arthur Andersen. Arthur Andersen, I was in corporate finance. Enron happened, and I actually applied for voluntary redundancy, but effectively I got rejected. But still, my wife was pregnant with our first child, and for me to get to the next level, it was going to take me another year, and we needed the money.
Okay.
So I left that company, went to a boutique corporate finance house. Culturally, it didn't fit for me, and that's important, because it kind of helped me to realise how important culture is within a business. Culture eats strategy for breakfast. Mm-hmm. Culture in a business is everything. And that taught me a lot about culture. Left there, and I joined a firm that's now known as Together. The idea was that I would go around the different departments, underwriting, legal, collections, different sales, different departments. My first secondment was in underwriting, and I never left.
Okay.
Mm-hmm. So I went from underwriter, senior underwriter, head of underwriting, credit and risk director. Credit crunch happened, job got made redundant, and I left Together. Couldn't get a job for love nor money in lending, in finance, specialist finance. And so I got a job in IT. And it was my wife that said to me, you cannot be, I think we had 3 kids by then. She says, you cannot be in a situation where you're getting made redundant again.
Yeah.
You know, you're mid-late 30s. We cannot have a situation where we don't know what our future is. So that's why I started Roma. I started Roma originally as a side hustle. Moonlighting on the side is another way of putting it. So I have a day job which was actually in IT. I couldn't get a job in lending. And evenings and weekends, I was underwriting loans for other lenders. And they would send me a file that was that thick as a PDF. I'd go through it. I'd go back to them with a 1-pager. Your valuers missed this. Your lawyers missed this. That's on the title. That's on the credit search. That's in evaluate. Whatever it was, these are the issues, like 5 or 6 issues that material had to be sorted out. Go sort those out, and then you got a clean bill of health to go and lend. My main client was a firm that was then known as Drawbridge. It became Dragonfly, and later became Octopus Real Estate. I'm sure everyone's heard of Octopus Real Estate.
Yeah.
But so Roma was originally founded to underwrite loans, with its biggest client being what's now known as Octopus Real Estate. They built a team, so they were growing their business, and they wanted me to move to London. I didn't want to move to London. For me, family is everything. And so the work for me started to dry up. And I was like, well, what do I do with Roma? So I decided, this was July 2010, I decided to have a go at lending myself. So one summer holiday, or that summer holiday, August, we were in Spain, and I spent virtually all the 2 weeks finding out what you needed to do to start a lending business. Okay, so I got all the licenses in place, and by the time I came back from holiday, Roma Finance UK LLP, as it was then.
Yeah.
And by the way, that was because it was £10 to set up an LLP versus £120 to set up a limited company.
Wow.
And I wanted to save the 110 quid. That's a true story. So when I came back from holiday, as I said, Roma Finance UK LLP was a proper registered UK financial institution able to go and lend money. And then I had to go and find a deal. So I said I had this IT job. Lunch times, I'd get in my car, I'd drive a few streets away. I'd phone my old broker contacts, can I have a deal, can I have a deal, can I have a deal? Either people weren't available, and then they phoned back in the afternoon, I couldn't take the call, so I was busy, or most people say, we've never heard of you, not interested.
When you say deal, so you're looking for someone that needs funding.
Needs money, needs to
Right.
borrow money.
But did you secure any lending at that point in terms of wholesale lending?
So I'll come on to that in a second.
Okay.
So I first needed to find a deal.
Right.
And like most, people that start out in business, part of starting out in business is also winging things.
Yeah, yeah.
Okay, that's, you kind of like do it on the hoof, if you like. And it took me from the end of August to the beginning of November to find my first deal. And the first deal was a £75,000 second charge loan on a residential property in Hendon in London, which is a nice area. The guy was a diamond dealer in London. He had a £380,000 mortgage with NatWest. His house was at the time worth about 700,000. It must be worth £2.5 million now, I would imagine. But it was worth 700,000 at the time. £380,000 mortgage. He wanted 75 grand on a second charge to build a website, pay suppliers, and his invoice discounting facility, also in his business with NatWest, he was having some challenges and he needed cash quickly to move on. The only option that he had on the table at the time was Blemain Finance.
Right.
Their shortest term at the time was 7 years.
Wow.
Their cheapest rate was 11.9%. And so I said to him, because he wanted a 5-year loan, I said, if I can do you a 5-year loan for £75,000 at 11%, will you come to me? And he said yes. And I obviously had to win that deal.
Yeah,
I'd just been made redundant from that company, 2 years earlier. So that was the big thing for me. So I won that deal. I sent him heads of terms, and he paid me what's called the BSQ fee, which is for the second charge consent.
Yeah.
He paid me the valuation fee, and he paid my legal fees. But there was only one problem.
You didn't have the money.
I didn't have the money. Okay, so I thought to myself that I get family, friends, I'll ask around. 75 grand can't be that hard to go and raise. And I'll say to you what the word bachette means. Yeah. Okay, it's when the stars are aligned. My boss in the IT company was giving me a lift into work, literally around that time. The guy just paid his fees, give him a lift into work. And he said to me, "Are you still involved in the lending industry?" Well, I'd been doing all this underwriting for the past, virtually 2 years. And I just thought somebody had been blabbing. Someone had been talking about everything that's been going on.
Yeah.
And, honesty is always the best policy. And I came out with it. It was like vomit that came out. And I just told him everything. And his mouth was wide open. Obviously I was in breach of my employment contract.
Yeah.
I've been doing all this work. And he said to me, well, if you ever, I wasn't sure what to say, but he said, if you ever get a deal, let me know. So as it happens, I've just got this deal in. It's a true story.
Wow.
I've just got this deal in. So he said to me, right, you need to speak to my brother. So his brother happened to be in the office. I went to see his brother. His brother's first question to me was, okay, it's really interesting, but how much money are you going to put into this deal? So I took equity out of my house to do that first loan. I couldn't raise all 75 grand. He put in the rest, and that was that first loan that Roma did, funded and completed on the 15th of December 2010.
Wow.
So what did you have the cost of lending at? Well, how did you make that deal work?
So
did you make any money, or was it just to get stuff
the way so I had a mortgage.
Yeah.
Okay. So my mortgage, I can't remember what it cost at the time. Must have been 2-3%, whatever it was. Because I think by then base rate had come down from 5% that it was pre-credit crunch. So I think my mortgage was about 3% at the time. I lent my money into Roma at 6%. Phil lent his money. He's my business partner. Still is my business partner. He lent his money at 6%, and we charged the customer 11%. And what was interesting was when I went home from work that day, when we'd agreed, Phil and I, to do that first loan. Imagine sitting down with your wife and saying, "Listen, darling, have I got an idea for you? We're going to take money out of our house to lend it to somebody else secured on their house. And you know, to my wife's credit, she went, absolutely, if you think it's the right thing to do, I'll back you.
Wow.
And we did that deal. And then it was like, you know, let's go find more deals. And that kind of really spurred me on to phone even more brokers in my lunch hour. So the second deal that I got in was March 2011. My third deal, April. My fourth deal, May. And, you know, slowly, you know, we started to build a loan book. And we kind of ran it as a cottage industry for the best part of two and a half years.
Yeah.
And by the time it got to the end of sort of middle of 2013, it was like, you know, I couldn't find deals in the daytime. I met every single applicant face to face. I used to have a portable photocopier that I used to take in my car with me to photocopy the passport, driving license, bank statements, council tax, or proper old school, all the identification, ID and proof of residence. I used to photocopy it all myself, portable photocopier, meet the customers face to face, understand the story. And what was interesting is part of the reason why I went to those lengths to understand the people, the story, why we were lending them money in the first place, was because I had no collection skills. All I'd ever done was underwriting. And because I didn't have those skills, I couldn't afford for a deal to go wrong.
Yeah. So you want to make sure it was absolutely 100%.
I had to make sure it was 100% because I felt that if any of those deals in the early days would have gone wrong, then, you know, Phil would have sat down with me and said, look, this isn't working.
Yeah.
We're not making money. The loans aren't performing. And so it became, you know, very vanilla. But not vanilla around the, you know, thinking about only prime, etc. It was vanilla around, did I trust that person with my money, our money, to be able to deliver on the project that we were funding them to do?
Yeah.
And, you know, we made every decision was really thought through and every single loan performed. But there came a point where it became difficult for me to kind of continue on my own, finding deals, have a day job. I wasn't taking a penny out of the lending business. Everything, all the profit was being, you know, thrown back into it. And so I was searching for my first employee, kissing a lot of frogs. I'm sure you've been there yourself, trying to find someone to come into your business. You know, you think to yourself, I've got a solid business. What's the problem? Why can't people do it? I can't find the right person. But only later did I realise that actually it's a massive leap of faith for somebody to join you in a fledgling business, because actually their career can go south if it doesn't work out.
Yeah.
Right. So just for anyone watching this, like not understanding how bridging companies work and how they lend money, you just kind of explain. You first got someone with a potential deal to fund, and then you found the money. Is it like, and also it wasn't your money, it was someone else's money?
Well, part of it was
your
my
money.
Yeah.
But is it like for everyone's benefit, is it how normally bridging companies operate? Like they lend money from other companies, other people, individuals?
Yeah. So bridging companies can be financed in a number of ways. One way is that there's high net worth individuals that sit behind the company and lend their money out for a return. And we started in that way. I had one high net worth that backed me. And then later, I was introduced to other high net worths. I knew high net worths. The business had started to build a track record, so it was then attractive and less risky for people to kind of come in. Later, once you've got a track record, it's then easier to go and get institutional money. The first institution that comes in, you know, they often will charge a premium for that money because, you know, they're the first ones in. Once you've built a track record with an institution, it gives you leverage to go and get another one. And you know, slowly you get scale, you get volume, you get the track record, which puts you in a better position for negotiating, you know, better quality funding lines, more flexible funding lines.
So those funding companies is a bit like with employees, right? The first one, when they come, they have to trust you, right? And 100%. Take a bit of a risk and ask for premium, maybe shares, maybe something. Who was the first employee in your business?
First employee was a guy called Daniel Hill. He started the 2nd of January 2014, and he'll be celebrating 11 years with us
Wow.
in January 2025. And he took thinking back, it was a no-brainer from my perspective, but from his perspective, massively
There's a
perfect.
risk.
And the irony was that he started in January 2014, but the business couldn't afford to pay me. So Dan became its first employee, and I didn't join the payroll until the 1st of October 2014. So I had done virtually 5 years of completely unpaid, throwing everything that I had back into the business to build the balance sheet, and paid somebody else before paying myself.
That's a sacrifice you take as a company owner. And I think just coming back as well. So, look, most people looking from the outside, obviously you've explained the mechanics of certain how bridging companies work, etc. But most people looking from the outside, all they see is, I've got a deal from auction, let's just say, the clock's ticking up 28 days, and it's stressful. All they see is solicitors are slow, lenders are, everything's slow, and all they see is all these inquiries being raised by a solicitor acting on behalf of a bridging company, which then goes back to their solicitor, etc. So, just for someone looking at it from the outside in, why is it that they see things and everything does run slowly? Why is it that there is so many boxes to tick? Because you can explain that from the back end, then they can explain why that happens, and then it kind of there's less frustration for people when they're using finance as a whole.
So when I started the business, I found that I could instruct 2 different solicitors on the same loan amount, on the same property, and get 2 completely different experiences.
Yeah.
The lawyers would ask different questions. So I had no certainty as to the journey that a borrower and applicant would go through depending on who I instructed. And one of the very first initiatives that we took in the market in 2015, which was, this isn't right. The tail can't wag the dog. It should be the lender telling the lawyer what questions they need to ask. So we completely reinvented the entire legal process to the point where, as long as the customer is not extending a property outwards or upwards, or implementing a material planning consent other than an HMO license, our lawyers, we had absolute certainty what questions our lawyers would ask.
Right.
And there were 8 questions, and we're happy, we give the customer a copy of those 8 questions now. Okay, so they know what their lawyer is going to receive. As soon as those 8 questions get answered, and obviously there's a few subsections, right? But as long as the 8 questions get answered, legal docs get issued, get signed, deal completes. And therefore, we can say that 80% of our deals, our loans, can and do complete within a set period of time, because we've completely changed the whole way that the lawyers that work for us, the way that they work.
Yeah.
And it can be incredibly frustrating. So unless the lender is in charge of that legal process, they can't give a borrower certainty as to what their experience will be. And so we've been doing that. We've reinvented all of that, and that was in 2015. Look, some firms have caught us up. That's what always happens when you're a pioneer in a market. But I think it's very important to understand from an applicant's perspective, as part of their due diligence on a lender, what does the legal process look like? Is it fully insured? What does that insurance process look like? If searches are needed and are required, that is going to lead to delays.
Yeah.
If a physical valuation is required, that is going to lead to delays. So it's just as important for a potential borrower and applicant to be asking the questions around the legal process, around the valuation process, because those 2 things are often the biggest bottlenecks in a transaction.
And also just talking about that as well, so paperwork, which is the bane of any investor, trader, developer's life, so much paperwork all the time. It's all about efficiency. Do you offer e-signatures? If not, why? Is there a risk that if something went to, I don't know, repossession or court, whatever, that they don't recognise that as a legitimate signature? So why is it always that solicitors certainly ask for wet ink signatures? Yeah. But just need to understand a bit more about that from a lender point of view, and then obviously from a legal point of view.
So we did used to insist pre-COVID that everything is wet signed. COVID changed everything. And I think that DocuSign became a key tool in most businesses, good lending businesses since COVID. The only document now that has to be wet signed is the legal charge.
Yeah.
Because the land registry will not accept an electronically signed legal charge. That is going to change, but it's the land registry's process that needs to change to enable lenders to go and be able to DocuSign a legal charge. All the other documents in our process can be e-signed and are e-signed.
And from the perspective of the business, where is Roma right now, and why are you guys focusing on?
So we have three main products. We have development finance, we have bridging finance, and we have buy-to-lets. Buy-to-lets represent about 20% of our book, but the majority of our book is short term, and typically anything between 40 to 60% is development. The other 40 to 60% is bridging. At the moment, with the way the market is, bridging, single bullet bridging is our fastest growing product, and that currently represents 50% of all applications. So it has been lower, but we see that where people want to be in and out of a deal, where you've got a physical asset already there that looking to trade in some way, either add value or sell on for a profit. We see that as being a huge opportunity, and one we are going to be taking advantage of much more and supporting customers in that world.
And what makes you, from a business point of view, what makes you the most amount of money, taking into consideration risk and everything else? Is it the bridging product? Is it the buy-to-let product? Is it the development product? What's your kind of favourite product from a business point of view?
That's a really good question. So when a lender is doing development finance or bridging finance, where the loan is not serviced, okay. So let's say we write a development loan. A development loan is our most profitable product, but we don't see the cash benefit, or the cash doesn't come in often until 18 to 24 months after we've written the loan. So we've got to finance all of our interest payments on the money that we borrow on our facilities. We've got to finance our wages, we've got to finance our overheads. And so we've got all this money going out, in the hope that in 18 to 24 months' time, the redemption, partial redemption, full redemption is going to come in from the sale or refinance of the individual units, all the units at the same time. Okay, so that's a risk.
Yeah.
Therefore, it is more important we make money on those types of deals. Bridging is in and it's out within 6 months. So although most of our bridging is not serviced, we've still got to finance, our overheads in the meantime. But it's a much shorter window, and therefore the margin we make on bridging can be less than what we make on developments. Risk is less. On our buy-to-let products, those loans are serviced, and therefore the money comes in every single month to help meet our costs and our overheads. So answering your question, which is our most profitable product, I think that certainly development is our most profitable, but actually the one that puts food on the table, if you like, and helps us to service the running cost of the business is the loans where the interest is serviced.
Yeah.
But would you not consider the bridging from a point of view of getting them serviced, getting the bridging loan serviced? That's not something that you would consider? So
we would consider it, but if we're looking at getting bridging loans serviced, then there is extra,
you need to look at income
and affordability, the work that needs to be done, which can delay the underwriting process.
Right. So that's why you'd rather roll it up.
Not only that, but because so much of what we do in the past, and this can change, because so much of what we do in the past has been where somebody is drawing money down to go and improve a property. On those types of deals, and even with the property traders, cash is king.
Yeah.
For those people, because they always wanted to do deals. Well, the first time a bridging customer misses an interest payment, you're wondering what their position is. Whereas when cash isn't paid, it's not paid service monthly, actually you can, there's less underwriting, there's less management of the loan post-loan, there's less chasing. So from an efficiency perspective, we can offer a cheaper, better product to a customer.
And there's more, I guess, probability that whatever happens, they'll sort things out by the time that loan comes to maturity and hopefully pay it off.
Yeah, and one of the things that we're really good at is our contact strategy with our customers post-lend.
Yeah.
So there's lots of our competitors that will lend the money, 12 months time there, can I have the money back please? But without having, stayed in contact with our with their customer. we've got a very sort of nailed on contact strategy where we are consistently and constantly in touch with our borrowers to understand how the project or how the disposal or how the refurb, whatever it is, how that's going, so that if they do need more time or do need more money, then it doesn't come as a shock to us, it doesn't come as a shock to them, and we can work out a strategy that's going to continue to support them on their journey.
So like for like day-to-day investor looking to buy something in the auction, then maybe refurbish it lightly and then flip it on, what are the 3 tips that you would give them to basically, before approaching a bridging company, what are the 3 things that they should be looking at to make sure that they get the best rate, the best funding?
Yeah. So the first one is be as open as you possibly can about everything. Lenders, we've got access to all sorts of systems where we do find stuff out. And if we are not told something by a broker, by a customer, and we find it out, we're on, it's not a bad impression, but we're on the back foot wanting to know why it wasn't disclosed to us or whether that represents a risk or not. And so whereas if we're told up front about issues, we can go into it with our eyes wide open, mitigating that issue up front. And we've all got things that go on in our lives that we're concerned whether it's going to impact X, Y, and Z. But the more that we talk about, the more open that we are, the easier the process
It's the
is.
same with trading. I'd rather know if there's something that's got knotweed or structural issues, because we're going to find it out, but I can then underwrite that risk and give an offer accordingly, rather than the price changing down the line because we've not found that out at the start.
No different, exactly the same thing.
Yeah.
The next piece of advice I can give somebody is choose your lawyer carefully. Yeah. Because a bridge is different from a conveyance. A conveyancing lawyer who says, oh, yes, a bridge, I can do it, it's fine. Actually, it is different. You do need to act quickly. You and the lender's lawyer have got to be in touch with each other so that you know and understand what the bridging lender is likely to take a view on. So what's a need to know, what's a need to have and a nice to have, and what views need to be taken and when. So that's a second piece of advice I would give somebody. And I think that the third piece of advice is know and understand what your skill set is, because we're all good at some things and less good at others. Bringing people into your world who, a bit like I didn't have collections experience, so I only did stuff where I knew loans were going to perform. But when you're going into a property transaction, it may be that you actually need to bring in on some deals someone who understands what Japanese knotweed looks like. Yeah. Or someone who understands what, if there's sort of cracks in the bricks, whether there's likely to be a structural issue, look at the line of the roof. So somebody who can do the stuff that you can't do. Don't be afraid of asking questions and even admitting your own vulnerabilities and things that you're not as strong as.
So if you guys are looking for property funding, whether you're buying a property through auction, through an estate agent, get in contact with Roma Finance. We're dropping the link in the description below, and I'm sure someone from Scott's team will reach out to you and discuss the loan further. So Scott, it's been brilliant having you. Thank you for...
Can I just say one last thing, if I can?
Absolutely.
Sorry to interrupt you. This world is an incredibly exciting world to operate in, both from a lending perspective and also from a property trader's perspective. And the initiatives that we are working on at the moment mean that this company is best placed to support those that want to trade property. And we're delighted and excited about the initiatives that we're going to be launching into the market over the coming months. So we're good at what we do at the moment. We're going to be fantastic at it over the coming months. So watch this space.
Very good. Thanks for sharing your stories.
Thank you very much indeed for having me.
Thank you.